Joining us now, Sarat Seth, the managing partner and portfolio manager at DCLA. He's also a CNBC contributor. Sarat, great to see you again this week. Obviously, we're all waiting for Jerome Powell, so choose your own adventure, Sarat, in terms of what Jerome Powell might say. Is he going to be relatively dovish, hawkish, remain the same? And what's the impact on the markets?
I think he's got to be clear. I think the market's been waiting for a while just to get a roadmap here, Melissa, and to understand that, look, if we are going to taper, what's it going to look like and what are the parameters around it? The uncertainty around it, the backing off, hey, we're not going to do anything, we're just going to wait. I think if that is the message, then we need to know what is going to change things. But I think the uncertainty there and kind of the dovish outlook so far has really been a put to the market. I think if we get some type of idea, a roadmap, it doesn't necessarily mean the market's going to go down. I think people are expecting to do it. You had a little bit of a 2% correction when we thought rates would go a little higher. They over time need to go higher. The question is the timing and kind of how fast we do it.
But there is an assumption embedded in that statement, Sarah, and I think in most assumptions regarding, we need clarity around the taper timeline, that the taper and rate hikes are linked. And I'm wondering if there's the possibility that they are not linked, if that's actually increased uncertainty for the markets.
Yeah, that's a really good point. I think we don't necessarily have to raise rates and have taper happen at the same time. I mean, we can do tapering and then wait and see how that looks. And then over time, especially as the Delta variant's there, we've got uncertainty globally. Doesn't necessarily mean we raise rates. The market on its own can raise rates, but I think the tapering is something that the Fed needs to look at closely, and especially how that works in the bond market. Because one of the things, as an equity investor, the bond market is really not very efficient right now, and it doesn't really give us a lot of clues that we were looking for in the past. So I think if you have some clarity as to tapering, I think it makes investing and it makes people understand, hey, what is the future going to look like, at least a little clearer.
What does the market backdrop look like to you, Sarat, if we have a taper timeline, but there is the implication that the rate hike timeline is divorced from that?
I think the market would like that a lot, because it will basically say, hey, we are data dependent, which the Fed has talked about for a long time. And I think then growth will drive kind of where interest rates go. Earnings will be very, very important. And then globally, we'll have to see kind of where the rest of the world is. So I think that would be the, quote, Goldilocks scenario, where the markets will do well, fixed income markets will actually behave as well, less volatility. And at that point, I think investors will be a lot happier. Now, that is pure Goldilocks. There's a lot of uncertainty around a few other things that I just mentioned. But I think if you were going to write kind of how this should go, that would be one of the scripts that people would be looking